Let's talk about one specific macro stock, Palantir, because they reported earnings yesterday. The stock fell about 7-ish, 8-ish%. And like I said, the markets are open. This is going to reset here on FinViz. But you can see on your far right screen, it set a new all-time high of over $200. I don't know if it was 206 or 207, call it. And then it fell down 7-8-ish% yesterday. If you look at the Q3 report, numbers were very good. It was a beat and raise quarter, so that means that they beat earnings expectations. And remember, whether those expectations are high year over year, lower year over year, in a sense, it does not matter. As Frank says, whatever the expectations are, that's the bar of consensus analysis. So these guys, Palantir, beat it. And then they also raised forward guidance. That's what you want and need to see from a massive growth company that also trades on crazy valuations. That's always been the story. And this is what drives me insane about some stuff, is that when you go to Palantir, I listened to so many people yesterday on the mainstream and financial channels and all that kind of stuff talking about the same old Florida thing with Palantir. And you know what I'm going to say. It starts with a V valuation. And oh my gosh, it's overvalued. And look at the valuation and the PE. And let's have some fun here. If you look at old FinViz here, and take these with a grain of salt, I don't know where exactly they're pulling it from. The forward PE is 197. That's crazy. I admit that. If you want to look at the rear PE, it's 451. Well, by any metric, you can say that this is absolutely crazy overvalued. But that is not valuable to you retail investors or us investors, because it has always been a story of overvaluation. To say it another way, this is not and never has been a valuation story. When we recommended this for Curzio Research subscribers, we did not say this is a value play. We were not pounding the table on cash flows and low PE multiples and all that kind of stuff, and dividends and the steady growing, and hopefully it's going to be a dividend aristocrat sometime soon. No, we didn't do that at all. We said this is a growth stock and you have to ignore valuations, because that's what you do with these type of companies. You want to look at their TAM, their total addressable market. And Palantir was switching from that non-profitable to profitable on a GAAP basis. That's important because that was the same time interest rates were going from zero to being raised higher, and the market has to adjust. And they say, listen, we're not just going to put any kind of crazy multiple on everybody burning through money and sending it to money heaven, like a lot of the climate hoax stuff that was happening. No, they want to see that the business can actually be sustainable and turn a profit and stand on its own two legs. Then you catch momentum and you put up great growth, and the rest is history, and you can go just parabolic and go crazy. The rule of 40 is popular for these software as a service companies, and that takes the annual revenue growth percentage, and you want to add that to the profit margin percentage, and you just rule of 40 as the name hints. 40 is good, and if you're 40 or above, that's really good, and if you're 40 or below, it's like the combined ratio for insurance. If you're over 100, bad; under 100, good. The lower the better. In this case, the higher the better. Palantir put up a rule of 40 of over 110%. I think it was like 114%. Okay, that's impressive. But what really stood out to me, and what I think is going under the mark here, is when Alex Karp went on the CEO of Palantir. And yesterday he went on CNBC, and the anchors, it was during Squawk Box, and the anchors said it was kind of unscheduled or last minute deal. And they had a gentleman who was doing a biography or spent a lot of time with him, wrote a book on Alex Karp and then they made the announcement, said, hey, actually, Alex Karp is going to grace us with his presence here a little bit. It was not the exact next segment, but it was later on in the show. He's always entertaining to me. He's got an odd sense of humor and he's very outspoken. I respect that. Whether I like him or agree with it, I think that's a good trait to have. And he said something that stood out to me. And first of all, he talked about the retail investor. And he was talking about how he speaks directly to the retail investor, and the retail investor is a big component of Palantir's base, and also a big reason for their success. And by success, I just mean the stock is climbing higher and higher. And so when I go back to this Chat GPT and Groks, I want to share this with you here. When I think about this out loud, there are massive changes taking place that you want to grasp onto. And I use this too much at times, these paradigm shifts, and I apologize for that, for my lack of vocabulary. But one of the biggest shifts that's going on is in the retail investor area. And so here's some charts from, and I've compared these with the biased Chat GPT and the biased Groks and all this kind of stuff. But if you look at over the last 10 years, the retail investor, us individuals, the little guys, okay, have made drastic changes This is a great success story in the making. And I want you to be a part of this and participating in this, because this is the kind of stuff that just gets me wanting to nerd out on things. Over the last 10 years, you can see the ownership share, trading volumes, and participation rates, which they define here as the percentage of households that have exposure to stocks, okay? It has all gone up pretty significantly. Don't take this as the gospel, people. There's only one gospel. These are rounding numbers, okay? ChatGPT, Grok, they were pretty close. They have slightly different numbers and stuff, but I'm okay with rounding. This is not something where it's accurate to the decimal point. Don't say, oh, well, it's 51% or it's 55%. I'm a few percentages off, and therefore you throw out the entire argument. I mean, you're more than welcome to do that. This is a free world, and I want you to use your brain. My point is, you're going to miss the bigger point if you get caught up in those details. And I understand how that can sound silly, but email me at daniel@curzioresearch.com. In 2015, the participation rate was around 52% of adults. Fast forward to today, it's around 62%. That's a great increase. The trading volume has gone from, let's say 10% in 2015-ish, meaning retail investors are responsible for that type of volume, to between 20 and 25%. And I've even seen other, throw it into your Google machine and whatever AI they use and stuff. I've seen it go up to, 30, even 33%. And then you have your ownership share. So when you think about this, you want to think about, hey, you got big dogs, you got your institutions, your hedge funds, your family offices, rich guys. And then you have the individual investors are the smaller players. And you have ownership shares have gone up, even from a percentage standpoint, very nicely, from 15 to 18-ish to 24 to 26-ish. The reason I said that this is one piece of the puzzle is if you look to your far right here, the key drivers of that, this is showing you how capitalism works, how disruptors like Robinhood create products, go out on limbs, take chances, and try to gain volume in business and grow. Now, the reason this is so exciting and that I want to try it, and I'm not going to do justice here, but bear with me here. One of the biggest reasons that retail investor activity and ownership has gone up, and influence and power and momentum, think GameStop, think short squeezes during the COVID, is because you have companies taking chances and trying to disrupt other markets and gain market share. For lack of a better word, they're greedy and they want to knock this guy off the pedestal and they want to take his spot, okay? And the one thing that absolutely drives me Florida crazy is that for whatever reason, and I hope I get there and I have to make this decision someday, whatever your level of success and wealth is, when you get there, do not be like the billionaires and elitists that talk down to you. When you climb the ladder of success, do not turn around when you get to whatever that level of success is. When you get to the exit that says, hey, Florida made it. Do not turn around and try to pull the ladder up so that the people cannot get out or follow you on that, okay? Look at trying to widen the path, not through the narrow gate, but the wide path, all right? That's how you lift. If all these guys, all these billionaires, all these do-gooders, these private trust people that cover all their expenses for them and their families actually wanted to help the lower class, I would encourage them to maybe do that, okay? Robinhood. You come out with 0% zero commission trading fees. You don't think that really helped them grow their user base, disrupt other players, force the hands of other brokerages to do that? And that's great for the individual investor. Now, whether or not that was their intent and drive, I would love to think, and I do believe, that it was their idea to try to just offset or knock off the bigger brokerages. They wanted a piece of that pie. They want to be the numero uno. And that's a good thing. You know why? Because that kind of selfishness, greed for lack of a better word, actually helps the individual investor because it set the tone and it made everybody across the brokerage firm lower fees. And now you can get on several different platforms and trade stocks, most stocks, not over the counter. There's exceptions, I understand. But you can trade a lot of stocks for 0% commission. That encourages more activity from the smaller investor because now your commissions and such do not eat into those trades. Now, you can say, oh, well, that's not all good because some people are going to get on there and trade and gamble and blow up their accounts. Yeah, I understand that. I don't want anything to happen there. I'm not wishing bad on anybody. But it is much better opportunity, and there's a lot more positives on this T-chart on that side than there are for people losing money or whatever. I'm not being not compassionate towards that. I'm simply saying that is proof of how markets and things can evolve and work and help the individual, and that is a very positive thing. Now, then you had the COVID lockdowns. Again, COVID didn't lock anybody down. The governments locked you down, all right? So you had a COVID boom where you had 15 million new accounts-ish flood the market because everybody was sitting home. Then you have your GameStops and all that kind of stuff following the years. Now you have hypes, you have AIs and all that kind of stuff. Individuals are going to use different trading algorithms or whatever, just like the big guys. But the key takeaway here is what I think went under noticed or is not talked about enough is that the retail investor, you have a lot of power. You hear every politician, oh, now is our time and power to the people. And they mean power to the lowest among us, which is a lie most of the time. But you, as the retail investor, have more power than ever right now. And there's another big fight going on between Carl Icahn and the passive investors like BlackRock and stuff. And I'll talk to more about this in the future. One of the big fights that I want to take on and kind of participate and bring to the world is how you have the voting and the passive voting. And I've ranted on this in the past on how BlackRock and Larry Fink himself, that flip-flopper guy, and thank goodness he's flip-flopped to the right side in my opinion, currently, when they put a anti-oil person on ExxonMobil's board. Dollar Stock Club members made a good return on that easy trade. That's neither here nor there. But the point is that the individual investor is going from just your old dumb money to smart money. And I don't think that's going to change because the more data you have, the more access to data, and thank you to AI. And again, enjoy the ride, because if it turns out to be the Terminator, like a lot of people are warning about, then try to, I guess, make money until the machines take over. This retail investing side is something that I want to call attention to. I want your feedback on it, Daniel at CurzioResearch.com. And the value here is Palantir is not a valuation story. You shouldn't need me to tell you that. I will repeat that because everybody else telling you that is wasting your time and not providing value. What Palantir is a momentum stock. It's a great gauge on the market in general. Okay. If the market sells off, don't think Palantir isn't going to help or add to that and probably lead that. And just look at this chart here. This goes back over a little over a year. This gap up here on your bottom left around February, just at the beginning of February. They reported solid earnings. Boom, the stock pops up. It even rallies higher. Now, from this high, call it 125-ish, to the March low of 76, let's just round up, call it 80. There was some news about, hey, the nervousness of Trump, the tariffs, Liberation Day, all that kind of stuff. But really, the markets really tanked coming down and hit their April lows in early April. But this pullback here, okay, this wasn't because anything negative around Palantir happened. This wasn't because they came out and said, you know what, growth is slowing down, or we lost all these government contracts, or the commercial side isn't growing very fast. No, stocks got to do something between 9:30 and 4 p.m., Monday through Friday, mostly outside of holidays, on Eastern time zone. Have some humility, me including, I need that. I don't know what is behind every tick, okay? But do not sell or buy Palantir. You're not going to buy it on valuation, but do not sell and get out of this on valuation alone. If you've gotten profits, if you're taking this as a trade and you have a small loss or whatever, that's fine. But do not fall for this silliness and get involved in the argument of valuation and listening to people whine and moan about that. If you still believe in AI, if you still believe in this massive trend and that Palantir's total addressable market is going to continue to expand on both the government sides, U.S. and our allies, and also the commercial side, think everybody from energy companies to software companies, that's how to think about that. And if you want exposure to that massive growth, then look at your entry points. You can look at your moving averages. I can share those ideas, but that's not the point of this conversation. The point here is ignore the valuation on this. Focus on companies like Alex Karp that talk directly to the retail investor. That is one of the biggest drivers. You've seen that in Coinbase. You see that in Galaxy Digital some. Mike Novogratz, they take to X platform and they hold their conference calls, earnings reports on X. They do question and answers with investors and individual investors. That is a massive shift going on. You don't have to be a part of a great investment banker to be on that side, if that makes sense. And that is key. And that is very good for us individual investors. That momentum will continue. Bear markets are going to hurt. At some point, we will have recessions and drawdowns and all that kind of stuff. But mind your position sizes, mind your stops, and just understand that you, the retail investor, have more power than ever, and that will continue. And that is a great Florida thing.